Hello, everyone. Hope everyone's had a great weekend, and yeah, we are all ready for a new, refreshing week, I hope. Let's talk about IPOs today, especially some of the hottest IPOs that we are expecting in the Silicon Valley in this year. And without talking about Anthropic and OpenAI, this conversation will be not complete whatsoever. So, here is a news story that I came across in the Wall Street Journal, and I want to share some thoughts on that. Now, the interesting thing that has happened since the information age is that slowly but steadily all the companies, with a couple of notable exceptions, all the companies that have the highest market values are in the services or the software space of some sort. Now, over time, we got used to Microsoft's products, Adobe's products, Meta's products, and then a ton and ton of SaaS products, which are essentially software companies running on operating systems. Now, thinking of AI as a product has been, I feel, trickier than thinking of, software. Because on one hand, you have LLMs, which are standalone services provided by all these companies. And on the other hand, you have companies like Palantir who are embedding AI into their software. I'm not, obviously, just this is not restricted to just Palantir, right? There are tons, and every SaaS product company is trying to incorporate AI in some way or the other into their workflows. And more often than not, they use one of the existing models as their backend, and then they have their own billing structures with these AI companies, and then they put their own chatbot on top of it and call it something else, and then they brand it as their own, right? Now, when such a company has to go and ask the public at large to put their money in, it becomes more difficult to understand what you are actually buying. And of course, OpenAI and Anthropic are at the center of this, right? So this story from Wall Street Journal is saying the prior funding rounds of these companies shows, the article calls it an Achilles heel, which I don't think comes as a surprise to anyone. It's the soaring costs that are needed to train new artificial intelligence models. The 80-20 rule comes to my mind, where it is very easy to get to the first 80% of all what you can get from a particular technology, but to then try and keep getting to 100, that difference of 20 between 80 and 100, it gets more and more difficult. We saw a meteoric rise in the efficiency capabilities of these LLMs since 2023. But lately, we have obviously been seeing these models getting squeezed, together in terms of the metrics on how they perform. Not to mention, there has been so much news around, are they actually improving all that much? On the other side of this coin is relentless news on new data center projects being built, ever larger footprints in terms of the land these data centers require, in terms of the energy they require to keep functioning, and the level of efficiency or the incremental efficiency that they provide may actually not be that much. There is enough out there to say that in their current technological framework, LLMs may be reaching some sort of a barrier, some sort of a dead end. AI as a technology will stay, and then AI as a technology will continue to evolve. But we have to remember LLMs are just a subset of that whole, right? Let's look at OpenAI's funding rounds, for instance. Let me pull that up. So this is another related story which basically tells us, right? The largest funding round in Silicon Valley history, OpenAI completed that last year, raised $122 billion ahead of a blockbuster IPO, which is expected by the end of the year. So for context, everyone, this is from February 2026. This deal, the latest funding round, is valuing OpenAI at $852 billion. For a company that does not make a profit, for a company that has 0.3% of its users as paying customers. I could be wrong about the exact percentage because that will probably fluctuate every day. But let's just put it this way. Very few people pay for ChatGPT. As I've discussed in previous lives, Anthropic actually has a much larger paying customer base than OpenAI anyway. And that's why we see OpenAI actually wanting to go to the military and try and strike a deal with them. They need a reliable paying customer. Anthropic, maybe not so much, maybe not as much as OpenAI, because they are the new, they are the enterprise love child. Lately, they have come under flack for a couple of security breaches, but I think that'll be a hill they can cross pretty easily. Some of their code has gotten leaked, which might put a dent in some of their proprietary code base, but it's of course not all of it. I think it was just a part of Claude code that actually got released publicly onto GitHub. So anyways, guys, $852 billion for a company that's not making a profit, not expected to make a profit till 2030. This is definitely overpromised. But is this something new? Not at all. Like, that's IPOs. I'm a bit of I like to think that I'm a bit of a value investor. IPOs in the world of value investment are basically something you don't even touch, wearing a hazmat suit and having a 10-foot pole. Like, you don't touch an IPO even with that much protection because it'll always be overvalued, right? But there's more to this story. Let me go back to the headline for a bit, right? Now, OpenAI expects to spend $121 billion on computing power for AI research in 2028. So the company will burn $85 billion that year after almost doubling sales from the prior year. This is an expectation, this is a forecast. Now, both Anthropic and OpenAI release new versions of their AI models very, very frequently. Some might argue that that frequency is increasing to the point that Anthropic's latest model, the company itself has said that it's so good that it should not be released to the public. Personal take, that's just, in my opinion, marketing. Oh my God, we have something so great that we cannot even show it to the public yet. That is pre-IPO speak, in my opinion. You're just getting people excited about the stock because there is something so crazy under the covers that, oh my god, once it's released to the public, or if it's ever released to the public, or if they ever sign a contract with the intelligence military, who knows, that this is the best thing that has happened since sliced bread. I don't think any of that is true. It's better than whatever Anthropic's current models are. It might be a fair bit better, but is it something so crazy that the world can't use it? I cannot fully buy into that, right? So what does it cost to make a digital brain? So let me pull this up. Okay. So here is model training costs for both OpenAI and Anthropic. Now, Anthropic's is shown as a lot lesser than OpenAI's. Anthropic's is a lot lesser than OpenAI, sorry. This is yearly AI model training costs. There is a lot of debate or freedom given under the accounting standards on how to report profitability. In fact, one of these companies includes training costs, which is OpenAI, I believe, and the Anthropic actually does not. Right? Now, if we strip out the compute for research, OpenAI may actually turn a small pre-tax operating profit, not net profit yet, for this year. Also, so is Anthropic under its best case scenario. And if you sort of add that back in, yeah, OpenAI won't get there till the 2030s. Anthropic a bit sooner, right? So on the top, on the bottom right of this the screen I'm sharing, you guys, you will see that as a share of revenue for OpenAI, we are seeing a projection. Now, I want everyone to understand, for 2025 it dropped. Now for 2026, 2027 and 2028, they have basically put the same number, right? So it's going to be 100% of their revenue, and only in 2029 are they projecting a drop, let's say to about 50%, and then you're coming down to about 20. Now, it's called out here that Anthropics are basically, let me see. Yeah, so 2025 figure is an estimate for OpenAI's projections. Okay, so that's I guess, yeah, they don't have the latest data. And Anthropics, I guess there's the assumption they have. Oh, Anthropics is only till 2029, and they're saying that by 2029 they'll be at about 19-20%. So both these companies are basically saying by 2029 or by 2030, they will be at about 20% as a share of revenue when it comes to training costs for their models. So there is something to say that as the scale gets bigger, the per unit costs go lower. This is standard economics. There's nothing too mind-boggling here. But we have to remember, these are projections. These are not actuals. We don't know what the actual story is till we actually get there. I don't want to sound too pessimistic, but again, since we are already seeing these models giving only incremental return, I'm not sure how the math works out, right? Just how large of a data center are you gonna have to build to reach that number, and just how many people would have to be paying customers for your product? It's to me, a little bit over optimistic, actually quite a bit over optimistic. But again, this is the world of startups, this is the world of cutting edge innovation, and this is the world of, overinflated expectations. In the world of VC, there is a rule that a venture capitalist will look at, if they start at about 100 pitches, they will down select to about 10 for deeper analysis, where they're going to do further due diligence. They're going to move past that first slide deck that the founders sent them, assuming they're even selected, and then they will invest in one eventually. And then to be able to have a profitable company in their portfolio, they will have to invest in about 10 to maybe have 2 of them succeed. So now you guys can do the math on how many they actually need to even do due diligence on to be able to find sort of 2 unicorns or Pegasuses, if you will. Now, if we go down a bit, let's get to their profit figures a bit. So here is what the article is talking about as far as the profits are concerned for both the companies. Let me get rid of that. Okay. So Anthropic's data is on the right, and OpenAI's is on the left. Again, projections are very rosy, I would say. So the bars, the horizontal bars, are actually the ones that are saying profits excluding model training costs, and then the blue bars themselves, the vertical bars, are the ones that include the training costs. Same for Anthropic, right? So let's see that. We are sitting here in 2026 where it's supposed to be at a 0 with a negative burn of about negative 40, give or take. And from there on, something will happen magical in 2029 and then 2030, which will just make the company profitable on a excluding model training basis. And then even if you include those costs in 2030, it'll be profitable at about 40 million, right? Smaller bars for Anthropic, but a similar story, right? Something so magical is going to happen in 2029 that investors will start seeing a return, massive returns on their initial bets. Now let's look at the yearly revenue by the segments. For OpenAI, consumer segment is sitting at, well, barely anything right now, but so is the enterprise, right? And then they rely on largely consumer and enterprise till 2028, and then new products will emerge, and then those will also go into 2030. But something magical again is expected to happen around 2029, where the consumer section will just blow up. Enterprise will probably stay very close to what is in 2028, and then in 2030 consumer will go up significantly as well, and enterprise. And again, this the Anthropic story is basically the same with just shorter bars, and they don't seem to have any new products. I would argue they don't necessarily need to have new products, simply because they have a pretty solid paying enterprise customer base. So we see on the Anthropic side, the enterprise section is just a lot larger, and they are not even banking on consumers, right? So Claude is not known as your daily chatting buddy. Claude is mostly used by software developers to do their jobs better, right? I am not sure where is the appeal to the consumer to start paying for OpenAI's LLMs over the next 3-4 years. I use ChatGPT. I like the tool, but I use the free version because, as I mentioned before, this is a massive, this is a space with a lot of options. I can use Gemini, I can use Grok, heck, I've used Claude as well. Needless to say, now there is a whole book which tells you how to make your own LLM from scratch. I've not read that one. All I'm saying is, by the time we are getting to the 2030s, LLMs will be regular technology. It'll be like Google. You just end up using it. It's already like Google, but you'll just it'll be everywhere. It'll be table stakes. So why is it that we never paid for Google search? I agree. If you're not paying for it, then you're the product. I get all those arguments. All I'm saying is, out of my pocket, I've actually never paid to use Google search. I've paid to use Google's cloud platform and Google's cloud storage and etc. But I've never paid to use Google search. So why will I start as a consumer paying for OpenAI around 2028, 2029, where they're projecting this this segment of their revenue to go up? I'm not sure. Unless consumers somehow has, it doesn't make any sense. I mean, enterprise, military should be considered in the enterprise, but again, it doesn't really call out. Let me see this. Okay, Anthropic counts sales of its technology through cloud partners as revenue, while OpenAI does not. Okay, that's interesting. Anthropic counts sales of its cloud partners. Okay, so OpenAI is not counting its sales through cloud partners, which I'm not sure how many are actually maybe using it then. I don't know how many cloud partners they actually have. Yes, especially on Azure, you have Azure OpenAI, but Microsoft is also one of the biggest investors in OpenAI. So it makes sense for OpenAI's models to be provided via the Azure ecosystem. I'm just not sure. Anyone please let us know in the comments if that is indeed the case, right? Is OpenAI's models accessible through AWS, Google Cloud and whatnot? Let me know. I'm happy to be educated on that. So OpenAI and Anthropic are, with all the doubts, with all the question marks, they are among the fastest growing businesses in the history of tech. But that's in terms of valuations. I would argue fastest growing, it's almost the most easiest metric to highlight, but it's also the most convenient one to look at when you want to think about how quickly a company is growing. I think while it is true that they have grown very quickly, we should also remember when you have, when you're shooting soap bubbles, the largest ones are the ones to explode the fastest because they cannot hold that much air. It's a very thin film of water that's actually, capturing all of that. Again, I'm not trying to say that it'll be the case here. We should just be careful on the multiple you're putting and the confidence you're putting in something. You got to remember there's a lot of competition. There is Gemini, which is sitting with Google. Google, by definition, I've always felt, is the is the poster child for AI. They have the highest amount of data. Google Maps, all the locations that are sitting on that, all the businesses that have registered, all our histories, because we use Google Maps day in and day out to navigate to places. I mean, when was the last time anyone ever bothered remembering a way to some location which is, let's say, 500 miles away? I can understand you memorize the roads in your 20-30 kilometer, 20-30 mile radius, but yeah, if it's somewhere far, Google Maps it is, right? If every time, so whenever I find, especially when I'm at work, I find that Copilot's not behaving the way I expect it to, I revert to Google search, especially for work, because I feel as a search engine, it's the most reliable. It will show me the most relevant thing on the top very quickly. There will be an annoying Gemini summary. I'll probably ignore that. And then I'll just quickly start scrolling down the links. If I have forgotten to change my default search engine, then I'll probably just use Bing. But again, just the sheer amount of data that Google has, I have always felt they are the poster child to win this race, right? There's something called inference costs when it comes to these models, and they are basically eating into about half of the revenue for each of these companies. This percentage is expected to go down over time, but that means the technology is going to get cheaper to run. For that to happen, of course, the electricity output, especially in the US, needs to catch up quickly. I'm not sure what the status on that is. I know there are significant gaps, but I'm also aware all these gigantic data centers are actually just building their own mini power plants so that they don't have to rely on the grid. Now is only a tiny sliver of ChatGPT's users pay for the service, as I mentioned before. Most of Anthropic's revenue comes from enterprises, regardless. Needless to say, sorry. Let's get into something about the IPO space in general. I want to highlight another one. So another exciting IPO that we are expecting is going to be SpaceX, right? He also wants to, or Musk wants to take the company public as well. Now, typically there is a several month wait after the public debut before the company gets included in a major index, S&P 500, NASDAQ 100, etc. All the companies in this article, it's in the context of SpaceX, but they are trying to convince the index runners to, relax that restriction. They want to get listed on the indexes faster. Typically, that waiting period is there for the companies to demonstrate, for the new companies to demonstrate that they are stable and liquid enough to handle extensive buying from index funds. What happens is, as soon as you get listed on an index, it's not retail investors, you and me, who will go and we are the little guys. We are not the ones who will cause the price to move. We can try and take advantage of those, but we are not the reason the price moves. It's the Vanguards, it's the BlackRocks of the world that actually make the price go up and down, depending on the level of confidence they have in the company. Now, these kind of enterprises, they won't just buy one share, 2 shares, 500 shares. They'll buy them in millions. And for that kind of liquidity, The companies just need to demonstrate stability before they get listed. If in the ensuing time anything happens, the interest drops, the company needs to demonstrate that there is enough interest in their stocks that enough of those will be traded so that not everyone ends up losing their money. If such requirements are relaxed for any of these hot tech companies, I feel this is a signal that should be treated with caution. Stock markets, they thrive on liquidity. Liquidity is the fuel that keeps the stock markets alive. And every company that gets listed on an index should have to prove that they can do their bit in keeping that liquidity going. Especially these days, because most of the growth in the markets is coming from all the Mag 7, the tech stocks. It's already a very lopsided situation where you have one sector doing phenomenally well and all the other sectors struggling in one way or the other. These days you could say the oil sectors, some oil companies are doing really, really well, especially the ones who don't have too much of a footprint in the Middle East. They are especially doing good. But overall, if you strip out these group of 10 to 20, 10 to 15 companies, you will see that the rest of the market is actually not doing so great. In fact, it might even be on a downturn. In such a scenario, if we start relaxing liquidity rules, the very lubricant that all market players rely on to be able to enter or exit stocks quickly enough, that to me is suggesting that this is growth for growth's sake. There is very little, or the core is very soft, just to put it in everyday terms, right? Now, before I sign off, guys, I'll just show you another metric for OpenAI and Anthropic. This is their free cash flow. This is again from the same Wall Street Journal article. We see a similar story that free cash flow negative. It reaches a sort of a peak in 2028, and then 2029 suddenly drops. It's interesting, right? OpenAI is saying that their free cash flow will be negative 80, let's say a negative 80 billion in 2028. That's how much they'll burn through. Suddenly, in 2029, it drops down to negative 50. Right? So we are looking at 30 over 80, which is about 40% drop. And then all of that gets recovered and there's a positive free cash flow. So that's like 100%, more than 100% jump in 1 year. Let me know of how many other businesses you guys know that have been able to pull this off. I would personally feel Anthropic's numbers are a lot more reasonable in this space, because they are saying, okay, they are at least, I guess the maximum they go down to is like negative 15, and then a small bump in 2029, and then a big bump, and then you're getting to about 20 billion by 2030, or maybe 2029. Yeah, 2024 to 2029. Right? That seems more manageable, but again, my comparison is the one on the left. So yeah, this is where we stand when it comes to some of the most talked about companies in the world today. Now, AI as a technology will stay. It'll impact all our lives. It will reshape our workflows in many different ways. And soon enough, no doubt, we will see some of these companies listed on the stock market. No denying that. But if I had to say any, if I had to conclude this whole discussion in one sentence, I would be like, be a bit careful. Don't ever overpay just because the technology is cool. The technology is amazing, no doubt. Is it a sensible investment? Definitely not at the prices the IPOs ending up starting up at. Don't go into it till you know that okay, it's stable, your P2E is come down to a reasonable level, and there is something in the annual reports which is suggesting that consumers or enterprises will flock to get this technology. Anyways, guys, this is Abi signing off. Do like, share, and subscribe. As an April mission, I want to set a target. Let's try and get to 50 subscribers by the end of the month. We are at 33 right now. Let's grow this family even further. Thank you for all your support so far, and looking forward to an endless stream of such conversations. Maybe we can start bringing in more people, more guests, so that you can listen to their opinions as well. All of that is in the works. But for now, one thing at a time, let's shoot for 50 by April 30th. Thank you guys. Have a great rest of the week and see you guys soon.